Hi, and welcome to a mid-month update for July. So this is an update on my first video where I showed what I put a £1,750 startup investment in Trading 212. So I am a chartered accountant. I have a very small portfolio. I've opened this channel to be completely transparent in my investment. Please don't treat it as financial advice. It isn't. It's just adding hopefully about £250 a month after paying out all my expenses to put into this investment portfolio to try and grow my wealth and to share it with anyone who's interested to look at it to match against their own investment strategies and stocks and shares they get versus what I do. So without further ado, let's have a look. So this is the 1,750 investment, and you can see the reason why I've got just over £500 still in cash is purely because I'm still concerned over what the stock market might do in reaction to the tariffs and potential escalation in the trade war. So that cash is still sitting there just waiting for an opportunity. So I'm still looking to invest it. As you can see, I've made a £4.63 profit on it from the initial one, and I'll explain how that's come about. So the cash is going to be invested. I just need to find the right opportunity. You can see the Invesco All World, that's an ETF with a £16.55p profit. This was from the start of the month. Vanguard, FTSE has lost me money, £5.81. And Greggs, which was my impulse buy, which I talked around on the last video. This was very much, I thought Greggs had dropped in value. I thought this would be a very good one in the short term to turn a very good profit. And impulse buys, I don't think they're a good idea, and this is teaching me a very, very big lesson in investment around impulse buys, because as you can see, it was £17. The value was £171.38. It's dropped by over £20. That's a big drop on a small investment. So you can see my investment actually shrunk at the start of July by £5.05. So I started the investment in June, and you can see it's already down by £5. That's bad. I put the dividends and the costs on so I can get a net position. So the dividends was paid out by the Vanguard FTSE, and so my net position moved from £5.81 loss. You put the dividends on, then it's a net loss of about £1, still a loss. And Greggs, I paid stamp duty on that of 96 pence. So the loss isn't just on the capital, which is £20. You've got to add on the £1 stamp duty, so it's over £21. So over an 11% loss on Greggs, which is truly terrible. And the cash, the differential of that 77p is purely on interest that I've got in the liquidity market. So, it's 0.1, so that's return. So as you can see there, from that early investment in June, really, Invesco has been good. 3% in less than a month is superb. And Vanguard and Greggs has cost me money. So that was my position as of the start of July. So 2 weeks later, let's have a look. So mid-July update. So this has been recorded on the 15th of July. So you can see Invesco has continued to grow. So that profit is now £26. So unrealised profit is that, because I've obviously not sold it. Vanguard is now in profit, which is great. Greggs has decreased its loss, so that's good news. And the cash has been growing because I still haven't moved that investment. I'm still getting the interest. So what does that mean overall? You can see I've almost got to a 5% improvement in Invesco over the original investment. Vanguard has come up to almost 2%, so almost £10. That's a good return so far in a very small space of time. Greggs has still lost just under 9%, and the interest from the cash is still coming in, still quite handy. It's now paid for the stamp duty from Greggs. If you look at it, the £1.23 now offsets the 96 pence stamp duty. So That's good, so that's mitigated. So the net position is the very small portfolio has made almost £20, so almost a 1.1% return within a couple of weeks. So that's encouraging. And against the July update, where I was showing just over a £5 loss, you can see that that's now moved to, if I just zoom in, a 25, almost £25 change. So from a £5 loss, almost £25 up on that, which is a 1.4 percentage change in 2 weeks. So there is encouraging signs for this investment. I will give another update at the start of August. So hopefully, if it can move 1.4% in 2 weeks, let's hope the markets keep growing for all of us. And to be fair, I'm not going to be greedy on this. I just would quite like Greggs to improve even further. That would be good. The Invesco is being a star performer so far, and the Vanguard with the dividend has been really strong too. So that's where I'm at, and hopefully by the next update I've got more certainty over the stock market, as much as you can do with the ups and downs of the tariffs, which are supposed to come in on August the 1st. And so I should have invested a bit of the cash into a stock. So hopefully all will be revealed, and you'll see that next time. Many thanks, and if you like this and you want to track how this portfolio is doing, feel free to subscribe, feel free to like. It'd be great to get some support, and it's also great to hear some comments and understand how you are doing with your own individual portfolio and investments. Until next time, take care.